Good morning. It's Tuesday, July 30th, about 6:30 a.m. Central Time. Overnight, the precious metals are slightly higher. And the remainder of this week, we're going to see an avalanche of economic data in conjunction with big tech earnings from Microsoft, Amazon, Apple, and Meta. Gold and silver futures continue to edge higher ahead of consumer confidence into JOLTS labor data. The Federal Reserve will make its interest rate decision tomorrow, so it's time to brace for another round of volatility. Now, last week, we saw two of the big tech earning names here. It was mostly Tesla and Google. They're the ones who kind of set off that sell-off in the NASDAQ market, which spilt over to other things, other risk assets, things like copper that weighed in on the silver market and ultimately dragged down the gold market. So it's important as a precious metals trader to take clues as to all these different events and what type of risks they could present themselves. Now, later on here today, we're going to see consumer confidence. The expectations are for 99.7. The previous data point was 100.4, so we're expecting a lower print. That lower print, if we get that will help reaffirm that this interest rate cut will happen in September. So we want to continue to monitor that, as well as the JOLTS job opening data. That's one of the data points that Jerome Powell really monitors and follows closely. The forecast is for 8.02 million job openings. The previous was 8.14. Now, you would think that less job openings is a bad sign for the economy, but what it is that it actually is that. What it means is that these companies are not in a position to continue to expand and hire more. So the amount of capital they have to deploy towards adding more employees has gone down. You want to see more job openings as the economy becomes robust. So both of these data points are going to be contractions in the markets. Now, looking at some other things here, CME Fed Watch Tool, about a 10% chance that the Fed will make a 50 basis point cut in September. The expectations are about an 85% chance of a 25 basis point cut. We'll want to continue to monitor that in conjunction with the data that comes out this week. What we don't want to see is all of a sudden the 50 basis point cut is erased, the 75 basis point is non-existent, and we start to see that 25 basis point expectation trickle down from like 85 to 65 to 50, and then we got a real bad problem here. You're going to see the precious metals continue to roll over. We do have that. So we want to see this economic data to come out a little bit weaker than forecasted. Now, getting into the gold market here, and a couple things. One, be sure to pay attention to the tactical support and resistance levels. This uses a price volume volatility method of calculating support and resistance. So have that in conjunction with your charting based support and resistance levels, because of the fact it's going to look at changes in volatility to determine what is the probable range for each and every trading day. So if you could look, we could compare the data from yesterday to what yesterday's high and low is, and I think you'll be pleasantly surprised at how close and accurate those tactical support and resistance levels are to those probable ranges in the markets. How to use the second level and third level are degrees of spikes in volatility. So start to pay attention to those as we come into numerous data releases into the end of the week. Now, looking at the markets here, it's like deja vu. Futures are trading higher in the overnight session. We did see GDP data in Europe, and it really left traders uneasy about the state of the economy in Europe. Germany's output had unexpectedly declined in the second quarter, showing the challenges that Europe also faces and the ECB. So they'll be set to make another interest rate cut here in September. So if there was ever a time, really, in my opinion, for gold and owning gold and having exposure to gold, I really think it is now, because of the fact that globally all the interest rate cuts are expected out of many different central banks. So looking at the charts here and the chart pattern, it is going to take a move back above 2482 to shift the markets back to a bullish trend. A close below 2386 could trigger a bearish trending market. That's why I'm slightly neutral in the market stance. However, if you look at the seasonality, which I put in at the bottom of the metals edge, you're going to see that historically July has been a great month for the gold market. So it gives me that slight tilt. Plus, I know that money is looking to be allocated in different places. And if money's uneasy about the state of the stock market, things like that, it's got to find a home, and what better place to have some exposure to the gold market. So if you look at the stochastics, they are rolling into oversold territory. DMI plus is over DMI minus right now. So a couple of these indicators, a couple of these momentum indicators are giving conflicting signals, and that also reaffirms kind of that neutral stance, saying that the market is in this kind of transitional phase period. Now, I do lay out in the Metals Edge a lot of different support and resistance levels, whether they be psychological, whether they be bull trade triggers, bear trade triggers, or the algorithmic support and resistance levels. You want to check that out. Getting in this silver market, futures continue to consolidate. So you had that big, huge sell-off. It was the July 25th breakdown that took the market to this bearish to neutral trend. And since then, we've consolidated sideways. Look at the past 3 trading sessions, 4 trading sessions, 2750 has been that low. You don't want to see the market make any kind of meaningful breakdown below that, because chances are we're going to go down to, some of the critical levels like the 200-day moving average at 2645. I think a test of the 200-day moving average is a spot where people start to come back in and allocate money back into silver, because the ETF inflows have just been non-existent. Now, another clue here that you're going to want to watch if you're trading the silver market is keep an eye on that copper market. It will give you hints as to additional stimulus measures by China, which could be the gasoline that we need in order to stage a meaningful recovery in the silver market. One other critical level to watch is going to be that 2908. That's the July 25th high. If we could break back above there, chances are we'll retest psychologically the $30 level. So giving you a couple ideas here, a couple clues on some of the things that I'm looking at. If you want to check out the Metals Edge, that's the written up piece that gives you a lot more details than this Metals Minute video. Be sure to send an email to info@Blue Line Futures. We'll get you on a free trial of that. You can check it out for a couple weeks and see how we stack up. I think that looking at the tactical support and resistance, I think could play a valuable asset towards people that intraday trade in the precious metals markets, or looking for spots to add or reduce positions ahead of some of this key economic data. You got any questions? Give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.